Hello everybody, in this video I'm going to be doing a brief stock analysis for MGM, and this is not going to be any kind of deep dive into their financials, but more so me just giving my opinion on the company as well as the industry. And I do a ton of other brief stock analysis videos very similar to this one, so be sure to come and check out my channel if you do enjoy. I like to start off by taking a look at the 5-year chart just to get a longer-term growth perspective for the company. But since MGM has been hit so hard by COVID, it's actually a little bit better to look at a shorter-term stock. But you can still see pre-COVID, the stock is up over 44% in the last 5 years, which is really, really great growth. And this is a little bit more useful to analyze unless you're going to be holding onto the stock for many years to come. But here you can see that pre-COVID, the stock was at about $34, and then it dipped all the way down to $6, which is pretty insane. So if you did get anywhere up, invest anywhere close to $6, it quickly went up to around $24. So you quickly saw a 4x return there, and then the stock's up to about $20 again, but may continue to get hit hard in the coming weeks as a second wave of COVID is looming. But if you are able to invest around $15 or $16, I would say there's really strong results for the stock's performance, and you should be able to turn a good profit. Taking a look at revenue and earnings year over year for the last 4 years, so it looks really good. You see an increase year over year in revenue, and then other than a little bit of a dip in earnings in 2018, earnings are pretty steady as well. And then it's kind of the reverse, looking at quarter over quarter. For the last 4 quarters, you see a huge decrease in revenue for the last 2 quarters, which is as to be expected, just because at the end of quarter 1, COVID really started to ramp up. And then in quarter 2, pretty much most of their facilities were closed and they were making very little revenue and actually losing a lot of money in the meantime. I'm expecting to see something similar in quarter 3, even though they did start to open back up and make some more profit. Next up, I'm going to talk about some points by the Bulls and the Bears by analysts at Morningstar. The first one here is that MGM's properties are positioned to benefit from the expansion of domestic sports betting. So apps like DraftKings have really been blowing up in the last year or two, and these casino-type companies are increasing their sports betting games in-house as well, and they're turning a really great profit. And then the next point is talking about their Asia Pacific growth with their casino in Macau as well as their casino in Cathay. MGM is one of the few casinos or U.S. casinos allowed to operate in China, so this is definitely a really great opportunity for growth in the future and far beyond their growth opportunity here in the United States. And next up, I want to talk about a few negative points from analysts at Morningstar as well. The first one, and the biggest negative point, especially for the short term, is COVID. There's a lot of talk about a second wave of this thing hitting right now, which could really, really hurt them in the short term. And they already have $12 billion of debt. So taking out more debt, they're going to have higher interest rates, and it's really going to hurt them for the short term and the long run, as they're not going to be able to be open and therefore make revenue, and it's going to make paying that debt even harder. And then the next point is that the majority of their revenue is still coming from the greater Las Vegas region, and which has lower margins as well as other financial metrics than the Macau location, but they are trying to expand in China, but they are facing some issues and barriers, which leads to the last point, that Macau and Chinese governments are transitioning towards non-gaming resort destination site, which could seriously hurt their casino games and make them transition into a non-gaming mix, which they've never really had to do before. So I'm sure they'd have to kind of invest a little bit to figure out what that would look like. And lastly, I wanted to show their research report overview. They're given a 4 out of 5 stars. Even though they are in about $12 or $14 billion of debt, their balance sheet still doesn't look too bad, and they are going to be able to make that up in future years with their revenue, even their really long-term debt. They have no economic moat, which is somewhat true. They do have a lot of casino games specific to MGM and a really developed brands, but other than that, they don't really have any patents or anything like that. And then they're given a fair value of $30, and they're probably going to dip lower down to about $15 here pretty soon, but that doesn't change that they're worth $30. And I'm sure the stock price will return to $30 within the next couple of years. Uncertainty high, that's definitely true. I would even go far as to say it's very high, just because, as I've already mentioned a few times, the second wave of COVID, and then stewardship standard. Don't really know much about their top management, but they seem to be handling things pretty well right now. If you do have any further questions, be sure to let me know down below. I do have a ton of other brief stock analysis videos, so be sure to come and check those out. Subscribe for more content, and thank you so much for watching to the very end.